Hi there, welcome to Kneppy Invest. In today's video, I'm going to be looking at a small cap company on the ASX, Energy One, focusing on their financial year 22 results. We'll be also looking at the valuation of the company as it stands right now on the 27th of September. Now, for full disclosure purposes, I am a shareholder of this company. I have been a long-time shareholder and hope to remain a long-time shareholder of Energy One. So that should give you a clue about whether I think this company is high quality or low quality. And I'll talk about that later in this video. So what exactly does Energy One do? Now, this is a supplier of software and services to wholesale energy trading markets. And some of their solutions and services include energy trading in risk management systems, physical energy building or bidding, nomination scheduling and logistics, automated trading on intraday markets, position management, power generation scheduling, and auction bidding, and bulk gas transmission pipeline operating systems. And the last one is market analytics. So a lot going on, and this company is growing, continues to grow. They are quite acquisitive, but even though I am a little bit wary of companies that keep on acquiring other companies, it is a bigger issue for bigger companies than Energy One. Now, I haven't seen any research in regards to how acquisitions can be value destroying or value creating for small cap companies. But definitely there's a lot of research in regards to acquisitions, how they can be or tend to be value destroying for larger cap companies. So that's one important thing, an important risk moving forward for Energy One is that they are a highly acquisitive company. Currently, I'm going through all the financial year 22 results. I plan to get through every single company that released financial year 22 results by October 13. At this point in time, I'm doing about 10 to 15 a day. Fortunately, and the reason why I want to finish this this project by October 13 is because my next runner shift starts on October 14, and we're going to start seeing quarterly reports being released in October. And the last 2 weeks of October, we're going to see a flurry of these quarterly reports released, and I want to finish this project by then. However, I do or have drawn up a hit list of companies that I want to do a video on in regards to financial year 22 results. And these are the next 5 companies I plan on doing a video on: X-Tech, IPD Group, BlueScope Steel, Data3, and Car Sales. I am not a shareholder of BlueScope or Car Sales. I am a long-term shareholder of X-Tech. I've been a holder of X-Tech shares for about 5 years. I am a holder of IPD Group, a newly listed company on the ASX, and the share price of that company just keeps on going up. And today was the first day I have heard IPD Group mentioned in a podcast. I think that podcast was Livewire, and it was about small cap companies on the ASX, and a particular fund manager just mentioned that IPD Group, or in their opinion, IPD Group is being overlooked by the market. And Data3 is a company I do own because I do think that is burgeoning on becoming a high quality company. And I decided to take a long position in that company about 6 or 9 months ago. Car Sales, even though that is a growth company, a high quality company, I have not had a close look at that company ever, and which surprises me because I do think Car Sales more than likely would fit into that high quality spectrum. BlueScope Steel is a company I held for a short period of time. More than likely, when it comes to the quality of that company, I would probably put that towards the low quality spectrum. And the reason why I held that company for about a year and a half is because I just wanted to ride the positive trend, the positive sentiment in that company. If you have any suggestions, any companies that have released financial year 22 results that you think I should do a video on, just leave that the company in the comment section of today's video. Now on to whether I consider Energy One to be a high quality company or a low quality company. And for the simple fact that I hope to be owning this company for the long term should be a good sign that I think that Energy One is a high quality company. And I'll talk about why I do believe this company is high quality during the rest of this video. Because I consider Energy One to be a high quality company, the chart or the share price action is much less important to me than the valuation. If I see the valuation of Energy One get a little bit too stretched, if the market is getting a little bit too excited, that might be the time to lighten my position a little bit. But if I see the valuation come down a lot, if the market is scared about something, that could be a time to take or build up my position in this company. So one of the ways you can determine the quality of the company is simply by looking at the long-term chart. So this is the weekly chart for Energy One, going back to 2012. And the share price has significantly grown for this company. So that could be a signature that this is a high quality company. Now, in saying that, the share price has pulled back during 2022 from about $7.60 down to in the $4.50 to $5 range. Right now, the share price is just below $5. So this pullback in the Energy One share price is not because of the company itself. It's because overall negative sentiment in the markets and overall negative sentiment in tech companies. And Energy One falls into that tech company spectrum simply because they are a supplier of software and services. Now on to the financial year 22 results for Energy One. And before we have a look at the financial metrics, revenue, profit, and operating cash flow, it's best to know what the market cap of a company is. And for Energy One, at a share price of $4.88, the market cap of this company is 144 million. So now we know how much this company is worth based off the market and market cap. Now on to the financial metrics. Revenue, financial year 22, 32.2 million. This company is profitable, $3.6 million of profit in financial year 22. And this company is operating cash flow positive, $5.9 million in the financial year. And that operating cash flow is minus the leases, which is something I do for all companies now. Now, the earnings per share for Energy One is 13.3 cents. And now we can sort of have a clue of how this company is valued by the market in terms of valuation metrics. So P ratio, price to sales ratio, and price to operating cash flow. And I'll talk about those valuation metrics towards the end of this video. Now on to revenue growth for Energy One. And in fact, when I first start researching a company, the first thing I look at is whether energy is growing or not, because revenue growth is very important for me. In fact, I'm going to do a video on this, so on why revenue growth is really important for me and my investing style. So have a look out for that video. More than likely, I'll release that video on September 29, 2022. Back to Energy One and their revenue growth over the past decade. And revenue has grown at a very impressive clip. It's grown from $2.3 million in 2012 to $32.2 million in financial year 22. That's a 29.3% growth rate per year. Over the past 5 years, revenue has grown at 32.7%, and revenue has grown at 17.4% over the past 3 years. Now, I should mention something here. That revenue growth percentages are revenue per share growth. And that's very important for Energy One because this company is acquisitive. They do, raise money. And by raising money, they are issuing more shares. So shares on issue for this company is increasing. So it's best to look at revenue per share growth, not just revenue growth. Whenever a company releases their financial results, the first thing I'll look at, I'll take a cursory glance at the revenue, whether it has grown from last year or not. And then I go straight to the statement of cash flows. And then I work my way back to the balance sheet and then the profit and loss. And in the statement of cash flows, there's a few things I'm looking for here. Growth in receipts. And I should already know whether receipts are going to be growing or dropping just based off the revenue growth. They're not identical, but they are linked in a way. The next thing I'm going to look for is whether the company is operating cash flow positive or negative, and whether operating cash flow has grown from last year or this year. And for Energy One, in fact, operating cash flow has actually fallen by about $1.5 million from last year to this year. And one of the reasons why it has fallen is because income tax paid has increased from last year to this year by about 1.5 million. You could also look at changes in working capital, and you'll find that in note 8. I'm not going to show you changes in working capital in this video. I have been doing it for other companies, but I won't do it for Energy One. Now, investing activities, if you want to calculate the free cash flow, it's very important to look at payment for property, plant, and equipment. That's capital expenditure. For Energy One, they only spent $170,000 on capital expenditure. But I think it's also very important to look at payment for software development and costs, particularly if you are calculating the free cash flow. I believe that belongs in the free cash flow. So because this is an ongoing cost, that software development cost, spent $3.5 million in financial year 21 and $4.5 million in financial year 22. So very important to look at certain things depending on what the company is. For example, if you're looking at an airline company, they're going to be spending a lot of money on payment for property, plant, and equipment, because airline companies tend to be capital heavy, not capital light, like Energy One is. Whenever a company releases their financial year results, a lot of times those companies will also release some sort of guidance for the next financial year. And a lot of times that guidance is released in the presentation the company has released alongside the financial statements, and Energy One have provided some guidance for financial year 23. And their guidance pertains to revenue and revenue growth, and EBITDA growth. And this company and their management expect revenue to grow 37% in financial year 23, up to $44 million. And they expect EBITDA to grow at 33% for financial year 23, up to $12.5 million. So we have a benchmark now moving forward. And if this company releases any upgrades or downgrades, it will be based off those numbers they have provided in their financial year 23 presentation. Now onto the valuation metrics for Energy One. And because I consider Energy One to be a high quality company, whether the valuation of this company is too stretched or low, that's quite important. For instance, if I do think the market's getting a little bit too excited about this company and the PE ratio is too high, then I might lighten my position. If I think the valuation of the company is way too low, particularly if I think the company can grow at considerable rate over the next 3 or 4 years, then I might add to my position. So right now, the PE ratio for Energy One is 40. I don't consider that too high for this company. I could conceive of a future where the profit for this company quadruples, yes, quadruples in the next 3 or 4 years, which would mean a PE ratio of 40 is actually too low. Price to sales ratio 4.5, not too stretched for this type of company. And the price to operating cash flow 24.4. So again, for this type of company, that's not too high. I also calculated did a reverse DCF calculation to know what sort of growth this company has to provide to justify the current valuation. And it's only 21% per year in regards to earnings per share. And I definitely believe this company can grow at 21% per year over the next 5 to 10 years to justify the current valuation. And this is one of the reasons why I'm a current shareholder of this company and hope to be a shareholder of this company for the long term. The only reason I would sell my Energy One shares right now is if the share price quadrupled in a few weeks, a few months, and then I think the market's getting a little bit too excited and the valuations are getting a little bit too stretched, and then I would probably have to hope that the share price pulls back so I could buy in at better valuations. That's all I have for this video, looking at Energy One and their financial year 22 results. A few other things I have not mentioned in this video. These company shares are not highly liquid, so a lot of times you won't see shares of this company traded for many, many hours. Sometimes, some days, there's no shares traded at all for this company. So that's one thing you do have to take into account. But I don't care about the liquidity of this company's shares because I hope to be holding these shares for the long term. Now, if you do have any questions, any thoughts, any concerns, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.